call the Financial Secretary to the Treasury, Jane Ellison.
Thank you very much, Mr. Speaker. If I could, obviously it's been a very wide-ranging and at times passionate debate, and I'd like to address the amendments the government are making before turning to those amendments and new clauses tabled by the opposition. Mr. Speaker, government amendments 136 and 137, clause 2, clause 155. This is to make an administrative, clause 155 makes an administrative change to strengthen the GAR, the General Anti-Abuse Rules, procedural efficiency, and amendments 136 and 137 make small technical changes to that clause, which incorporate the new terms introduced by clause 156. And these new terms provide a new way of counteracting under the GAR procedure to enable the same advisory panel opinion to apply to multiple users of marketed tax avoidance schemes. And we believe these changes will streamline the procedure without altering the fundamental test that taxpayers are subject to under the GAR. They will ensure that a provisional GAR counteraction will apply equally to all counteraction procedures and enable tax to be protected for the cases we intend to address. Let me turn now to Amendment 145. Moved by the Right Honourable Lady, the member for Don Valley. This would give the Treasury the power to require groups to publish a country-by-country report showing their profits, taxes paid and other financial information for the countries in which they operate. And, Mr. Speaker, I think, as was acknowledged by the Right Honourable Lady and others in this debate, the UK has led international efforts. I must admit, I think the Honourable Lady speaks from the front bench has been a little bit, to say the very least, miserable about the leadership that the UK has shown. I didn't really recognise the description she applied, but others were more generous and have noted the fact that the UK has led those international efforts rightly to tackle tax avoidance by multinational enterprises for all the reasons so brilliantly articulated by colleagues like the Honourable Member, my Honourable Friend for Dover and Deal, and the reasons that we would all support in what he said. The government's also been a firm supporter of greater tax transparency and greater public disclosure of the tax affairs of large businesses, and for these reasons the government fully supports the intentions of the amendment and is supporting its inclusion in the bill. The government has consistently pushed for a multilateral solution for country-by-country reporting. For example, the Chancellor made the case for looking at this at the G20 in July. And Amendment 145 is very much in keeping with this aim and provides the government with the power to implement when appropriate. It is nonetheless important that the power is used to deliver a comprehensive and effective model, as was acknowledged by the Right Honourable Lady, of public country-by-country reporting, agreed on a multilateral basis. And I'm sure we'll return to this issue on the basis of which we can go forward. But it means a model that requires all groups, both UK headquartered and non-UK headquartered, to report accessible information for the full range of countries in which they operate. And it is vital for ensuring that the policy intention of greater transparency is delivered. And it's also important for ensuring that UK headquartered groups are not put at a competitive disadvantage. And again, I pay tribute to the Right Honourable Lady in recognising that concern, as was expressed earlier in the year at an earlier stage in the bill, and that disclosure requirements can't be avoided through group restructuring, another issue we want to make sure that we're on top of. So the government remains focused on getting international agreement for such a model as part of its continued efforts to ensure that taxes are paid and paid in jurisdictions where economic activities take place. And she and the House have my assurance that the government will continue to take every opportunity to champion this agenda at the international level. And it's increasingly clear that we move forward with a welcome degree of agreement across this House. Let me turn to Labour amendments 163 to 168. Of course, yes.
Can I just, first of all, thank the Honourable Lady for the Government's decision, the Treasury's decisions to support my amendment. And I do hope that we can work together to look at ways in which we can make the journey to introducing this in this country with others a real possibility in the future. Thank you.
Indeed, and we've seen in other areas where we've shown leadership actually how much can happen in a very short space of time. So I think we are optimistic that we can make progress and as I say, with a welcome degree of consensus across the House. So if I now turn to amendments 163 to 168, 170 to 173 and new clause 12, which all concern penalties for offshore tax avoidance and evasion. Clause 161 and Schedule 20 create new civil penalties for those who have deliberately assisted taxpayers to evade UK inheritance tax, capital gains tax or income tax via offshore means. It would introduce financial penalty up to 100% of the tax evaded and public naming for the most serious cases. Amendments 163 and 164 would include within the penalty provisions the option of charging a penalty of up to 100% of any fee paid by a taxpayer to the enabler for the enabling service received. Now, Mr. Speaker, fees charged by organisations can take a vast array of different structures and formats. Without a clear definition of what constitutes fees or how the fee relates to the services provided, it would be disproportionately burdensome, we believe, for HMRC to apply and use such a penalty. And a penalty based on tax lost is a much clearer and more easily defined concept, we believe, which better meets the objective of sending a strong and clear deterrent. Amendments 165 and 166 would increase the minimum penalties chargeable for deliberate offshore tax evasion. And again, this government has significantly increased sanctions that can be applied for offshore tax evasion. However, we have to balance this against the need to maintain proportionality of our penalties and retain the incentive for taxpayers to voluntarily comply and cooperate with HMRC, an area in which we've seen considerable activity. And so we do believe, therefore, the ranges that we've set out provide a good balance. However, as with all of our penalties, we keep the rates under review. Amendments 167 and 168 would make it compulsory from HMRC to publish details of those tax defaulters who meet the relevant criteria. Now, obviously, public naming incentivises evaders to come forward voluntarily and cooperate, but it allows naming of those who refuse to cooperate with HMRC. And in the vast majority of cases, we would expect HMRC to name those who meet the criteria. However, mandatory publication would be inappropriate in some particular exceptional circumstances, or perhaps where there are wider consequences, such as economic market impacts from the information becoming public. Clause 164 and Schedule 22 introduces a new asset-based penalty for the most serious cases of deliberate onshore tax evasion, where the tax loss exceeds $25,000, and would levy a penalty of up to 10% of the value of the asset connected to the evasion, in addition to any other tax-geared penalties and interest due. Amendment 70 would apply a higher penalty of up to 15% to the underlying asset, rather than the 10% as set out in the bill. And Mr. Speaker, this level of penalty was carefully considered when it was set, accounting for international comparisons, as the Honourable Lady did refer to, and for the fact that it's a new approach to penalties for the UK in relation to tax matters. The Government has also consulted and engaged with stakeholders, balancing the arguments they set out. And we feel the legislation as it currently stands allows for a substantial penalty for deliberate tax evasion and will provide a significant deterrent. However, it isn't clear to us that an arbitrary 5% increase in the maximum would significantly increase the impact of the penalty. Clause 165 introduces a new criminal offence for persistent offshore tax evaders. Crucially, though, the offence does not require the prosecutor to prove that the taxpayer intended to evade their UK tax responsibilities offshore, increasing our ability to prosecute. A successful conviction under this offence can result in a fine or prison sentence of up to 6 months. New Clause 12 introduces a requirement to publish a report on the impact of the new criminal offence within a year of the Act being passed. Now, the new criminal offence is expected to come into effect from the 2017-18 tax year at the earliest. This is beyond the one-year deadline set out in the new clause, and so we feel it makes the amendment redundant. Amendments 171 to 173 will introduce a further defence to this criminal offence where a person believed the information they'd supplied HMRC was true and accurate. But, Mr. Speaker, these amendments do not work in practice. The part of the clause to which they relate is the offence for failure to notify HMRC of chargeability and failure to make a return. So in both these cases, no information would have been supplied to HMRC, and so this defence could not be applied. While Amendment 173 relates to inaccuracies in documents supplied to HMRC, again the amendment we feel is unnecessary. The offence already has a defence of having taken reasonable care to get your affairs right, which would imply the taxpayer believed they were true and accurate. Let me turn to new clause 7, moved by the member for Kirkcaldy and Cowdenbeath, which would legislate for a review of the impact of the tax regime on Scottish limited partnerships on the levels of tax avoidance and evasion. And a Scottish limited partnership is treated for tax purposes as a tax transparent vehicle, in the same way as a limited partnership that is established in England and or Wales is. But a limited partnership established in Scotland, as he set out in moving the clause, has a separate legal personality, which means the partnership itself can own assets and enter into contracts. And the government is committed to effectively tackling tax avoidance, evasion and aggressive tax planning, including where partnerships are involved, and indeed have secured over an additional £130 billion in compliance yield since 2010. Now, last month, Mr Speaker, the government launched a consultation looking at partnership taxation, including proposals to clarify the tax treatment for various types of partnership. We obviously will welcome the SNP's engagement in that exercise, and I would like to offer some reassurance with regard to the recent allegations in the media regarding the use of SLPs by criminal organisations. The government takes extremely seriously the points that have been raised and is working collaboratively across departments and law enforcement agencies to robustly tackle crime and fraud. Labour New Clause 13 calls upon the government to report into the UK tax gap.
Apologies if she said this, I just wasn't clear. Would the Minister please let us know whether or not she's going to support the inclusion of New Clause 7 on the basis that she's just made clear why it's very important and why it's a good idea for us to do this? And I think if she's not willing to support it, can she justify why the government is willing to leave this loophole undiscussed without a review?
Well, as I just laid out, Mr Speaker, in fact a consultation is underway which gives us an opportunity to look at exactly these issues, and as I say, I invite the SNP to engage with that. Turning to the lengthy speech in the case that was made for Labour's New Clause 13, the reporting to the UK tax gap. Mr Speaker, the tax gap is an official statistic published each October and is produced in accordance with the Code of Practice for Official Statistics, which assures objectivity and integrity. The methodology is judged by independent third parties to be robust. It's been intensively reviewed and given a clean bill of health by both the International Monetary Fund and scrutinised by the National Audit Office. There is therefore no need for reporting to the tax gap. And furthermore, HMRC published a methodological annex alongside the tax gap publication, which provides detail of the data and methodology used to produce estimates of the tax gap. And I think it's fair to say, in the course of moving the New Clause 13, the Honourable Lady speaking for the opposition painted a picture which I think on this side of the House, certainly I suspect actually in other parts of the House, would be regarded as at the very least ungenerous and in many ways inaccurate, unfair and indeed unrecognisable in terms of the way it downplayed the efforts that have been taken by this government in these areas. To call it tinkering at the edges is simply nonsense. Since 2010, the government, for example, has provided HMRC with £1.8 billion to tackle evasion, avoidance and non-compliance. And over that period, as I said before, HMRC have secured an additional £130 billion in additional tax revenues. And we have shown considerable ambition and indeed, as other members on the opposition side have indeed been generous enough to acknowledge, international leadership. So I don't accept the criticisms that were voiced from the front bench. And it is worth noting that at Summer Budget 2015, the government invested a further £800 million to fund additional work to tackle tax evasion and non-compliance. No government, and certainly in particular the last Labour government, have come close to being as ambitious as we have been since 2010 on this important agenda. And indeed, the extent to which the extent to which actually there was considerable agreement across the House in the earlier part of the debate, and the fact that the government has accepted the Right Honourable Lady for Don Valley's amendment, I think gives some weight to the fact that we are beginning to strike a UK consensus about the need to tackle this, and we have a chance to continue to move forward. There is an appetite, I know, to return to these issues. There is a real desire to see the government continue to lead internationally on avoidance and evasion, and the House can be reassured that that is exactly what we intend to do.
Does the honourable gentleman, the member for Kirkcaldy and Cowden Beath, wish to respond, which he is permitted but not required to do? He does.
A few words, Mr. Speaker, just to say that I'm incredibly disappointed that the government has chosen to drag its feet on the issue of Scottish limited partnerships, and on the basis of their own arguments, we will be moving new clause 7.
Well, that's commendably pithy from the honourable gentleman, for which I think the House is almost audibly grateful, if I can put it that way. The question is that new clause 7 be read a second time. As many as are that opinion say aye. Aye. Of the contrary, no. No. Division, clear the lobby. Order. Order.
The ayes to the right, 248. The noes to the left, 304.
Thank you. The ayes to the right, 248. The noes to the left, 304. So the noes have it, the noes have it. Unlock. We now come to new clause 13 in the name of the honourable lady, who will move formally, I believe. Formally, thank you. The question is that new clause 13 be read a second time. As many as other opinions say aye. Aye. Of the contrary, no. No. Division, clear the lobby.
The ayes to the right, 245. The noes to the left, 304.
Thank you. The ayes to the right, 245. The noes to the left, 304. So the noes have it, the noes have it. Unlock.